When a lot of people ask me this, and then they're shocked when I respond to them. This is simple math, people. This is your returns on an individual stock. Okay? All right. So, welcome to Math Class 101. You know, if you buy a stock at 10, okay, and it goes down to 5, how much money have you lost? 50%, right? For you to break even, what does need to happen? Stock has to go back to 10. Well, so when you lose 50% on a stock, if the stock goes back, if the stock goes up that 50%, you are never going to break even. Stock has to go up 100% for you to break even. This is why I could not talk more about what? Risk management. Cut your losses short if you're trading, when you're trading, because you're against this. A lot of people think, yeah, I'll hold it. I'm like, okay, go ahead and hold it. But the numbers are so skewed, and the more you hold on to something and losing money on, the more that has to go back up for you just to break even. So here are the chart. If you lose 1%, goes up 1%, you're even. If you lose 5%, it has to go up 5%. Required gain is 5% to break even. At 10%, it has to go up 11% for you to break even. This is where the numbers get larger now. If you lose 20% on an equity or underlying asset, it could be option, equity, whatever, just numbers, right? You need 25% the required gain to break even. If you're down 30%, you need 43% to break even. Look at these numbers now. If you're down 40%, you need 67% to break even. If you lose 50% or on unrealized loss of 50% on something, it has to go up 100% for you to break even. Think about this, okay? And just like I said, the stock goes from 10 to 5. You're still holding. Well, it has to go from 5 to 10. 5 to 10 is 5 plus 5 is 100%. So think risk management, people. If an equity or on any asset class goes down 60%, it has to go up 150% to get back to even. And if it goes down to 70%, down 70%, after you invest or buy, it has to go up 233% to come back to life, to come back above water. So please pass this around. This is math. Math don't lie. Math is black and white. And all I can tell you is that risk management is key. Don't let it get to these steep losses. 10% is manageable because it has to go back up 11% for a break even. 5 is manageable. So my number is 5 to 7 to 10%. If it gets there, I cut my losses short because I know what's coming. 20 is max because, okay, you can get back up to even with a 25% gain after a loss, but the rest is you can't sustain this. This is unsustainable. And the last thing I'm going to say about this, people ask me, here's it's not a trick question. Most of you will get this. How many times can a stock or asset go down 50% and not hit zero? How many times? Most people say twice. 50% and 50% is zero. No, there is something called a decimal point. Something can go down 50% forever to eternity and still won't hit zero, because after the decimal, the numbers will be like, hundreds of digits to the right. Okay. So think about this. Okay, people. So when you're trading, please manage your risk. Don't get into I bought it at 10, it's down to 3. No, it has to go up 233% for you to break even. Well, there's also opportunity cost, right? You're missing on things that could have made you 233% from the get-go.